speaker, our next panelist is Abheek Barua, Chief Economist of the HDFC Bank. So great to have you with us, Abheek. Welcome to the ETMIC Investor Conference, and thanks for taking the time out. Great to see you here. Let me just start off with a very broad and general question, something about the economy, and which we've been discussing with our previous panelist, Samir Arora. How do you assess the response of the Indian government so far to this economic crisis induced by this pandemic, economic and financial market crisis induced by this pandemic? How do you rate it, and what do you think needs to be done? What do you look at the measures that they have announced so far? Your thoughts on this, sir?
Well, clearly there are two facets to this. One is the response to the infection itself, which seems to have been bold. And I think in terms of alternative scenarios that people have presented on the basis of, reasonably rigorous models, we would have been far worse if it were not for the lockdown. I think the idea of the lockdown has been communicated very well by both the Prime Minister and various other dignitaries and so forth. But I think one of the charts that's kind of doing the rounds is that we are the economy with the most stringent lockdown, but with the smallest amount of stimulus, normalized for GDP or whatever you take. So in terms of the of handling the economic fallout of this, I'm not too sure that we've sort of done enough, even on the monetary side, where we seem to have been, far more aggressive side, which is, at best, tepid.
Right.
That's something I'd sort of, watch for. What kind of, additional stimulus comes our way, and it's not just entirely about the amount of money, because I heard Samir talking about chatting with Samir about the various sort of options in providing stimulus. It's not just about the money, and money is indeed limited in our case. And we don't have the so-called sort of exorbitant privilege of being in a hard currency economy. So money is limited, but I think there can be so many innovations that are possible on the basis of a sort of a limited, fiscal outlay and more risk-taking, if I could put it that way, by the RBI. And I'm just hoping that the efficiency of managing the infection so far, which obviously has sort of led to a fairly sort of, and will continue to lead to a fairly major economic, can be handled, and the economic policy response. On the point, of course, it was an act on MCLRs of sectors that are in dire need funds. Legitimate and justifiable risk aversion of this liquidity credit provided to these sectors. So what about buying the structured vehicle with a government backstop commercial bank? So that's one very big step in sort of reviving the economy, which is to sort of get credit going. And this can be done through a collaboration between the government and the RBI. And if we take a leaf out of the Fed's book or the ECB's book, it can be without the kind of enormous expenditures that other countries are in a position to incur on the fiscal side. This can be done through structuring, through creating these sort of quasi banks, if you like. The RBI, it's sort of kind of a joint venture, if you like, or a partnership between the RBI and the government. I think that's very, very critical to the recovery process.
Sorry to interrupt. Abhi, could you speak a bit louder? Your volume is quite low.
Okay, right. I'm going to do is, this is better?
Yes, this is better.
Okay.
Thanks.
Okay. Yeah.
Thanks for that. Thank you. Go ahead, Sriram.
Yeah, sure. So, what do you think? You think the government is being a little too tentative, too much worried about the fiscal deficit, too much worried about what rating agencies will say? That is one of the criticism that is really coming out of the delay in the economic fiscal stimulus package. That they want to do it slow, and they don't want to rattle overseas investors and the credit rating agencies. How worried do you think we should be when it comes to the global bond markets and the rating agencies?
Much that we would like to believe that, rating agencies we shouldn't pay heed to what the rating agencies do or say. And as someone, one very senior economist put it, that they should be kept in a state of permanent lockdown. We
Right.
we do have to kind of take what they have to say on board,
Right.
because you know in terms of both our short term and long term dependence on external financing, especially if we want to sort of get on a huge infrastructure financing program and so forth, it's all contingent on external money coming in, and a certain kind of external money, which does pay very careful. So pension funds and some sovereign wealth funds, which pays careful attention to our ratings. So I think ratings is indeed a constraint. The other thing is, perhaps the sequencing of not front loading all that you need to do and just sort of taking as much time as the lockdown kind of affords you, because nothing is going to happen during the lockdown, and taking various stakeholder inputs on board and creating a tailored, sort of a more nuanced kind of recovery package is perhaps the right way to go. So I don't know really, but I just hope. I have been disappointed and a little fidgety about them not announcing anything, especially since the other countries have gone the whole hog. But I just hope that this is the time now to slowly start showing what you have in your armory, because we need to see that too for any sort of expectations about a sustained recovery to be credible.
Okay. Okay. One question, and then we'll go to some questions from the audience. One question that is really bothering a lot of people is that we've seen some stories come out about the package that the government is preparing for the medium and the small scale sectors. On one of
Right.
the elements of the package is that you do some kind of a credit guarantee,
Yes.
partial credit guarantee, and there is a bit of a tussle, as we have reported on, between what the banks want and what the government is willing to provide. Hopefully, this will all get sorted out. Is that the best way to lend to the small and the medium scale sector? We've seen in the past that this guarantee scheme doesn't really work that well. I mean, we saw with the partial credit guarantee with the NBFCs. What is your take on
No,
this?
I think it didn't work well because the guarantees were not structured efficiently enough. I think banks have, gone to the RBI and, responded to the finance ministry's, various queries on
Right,
how these first loss, guarantees should be structured.
right,
I personally think that that is going to be a game changer if you just get the structure and implementation right. We've
right,
had this, guarantee scheme in place for a couple of years now. It started with the budget a year and a half ago, but it
right.
just was didn't take off. So it needs to be structured. You need to align the preferences of the bank with what you're sort of offering in terms of guarantees to them. So that's very critical.
Sure, sure. We have a question, Abhi, from many of our readers and many of our online followers. And one question is from Ashish Dogra from Delhi. And he wants to know as to what is it, which sectors you think will actually start recovering after the lockdown, and which sectors will probably lag behind. What is your estimate of how things will pan out?
No, I think recovery from the lockdown, and I'm just going to make a broad point just to illustrate how I'm thinking about it. And I think getting out of the lockdown is a big challenge, because I think on the one hand you have the public health imperatives, which is containment, the red zone, green zone, etc. On the other hand, you have the supply chains and the delivery chains, which are reasonably integrated. You have dealers in the red zones, producers in the green zones, input providers in the green, producers in the red, and so forth. It's a nightmare. So I to navigate this will take a bit of time, and so I would think that sectors that are kind of can get past this quickly. So
Hmm.
some of the service industries clearly are able to do this, because for them, virtual interaction, production in the virtual universe is much more easy. I think large industries with diversified and pan-country supply chains will take that much longer to pick up. So I would be careful about sectors, and this is just the short-term perspective on how industries get out of the lockdown. Autos, heavy, some of the heavier industries and so forth, and focus more on services, maybe some things like IT, telecom, which already have a considerable
That's
insulation
right. That's
against
right.
that. So yeah, and there are the no-brainers like pharma and
Related stuff.
healthcare to some degree. But I think one way to think about it is really about how each how each industry is affected by this conflict between containment on the one hand and the smoothness of the supply and delivery chains.
Right. Okay. Okay. There have been some suggestions from some economists that we should have something like a COVID budget. I think our next question, Chandraprakash Kulkarni from Nashik, he wants to know something like whether India should need a special framework and policy for the next 2 to 5 years to help us get through this, so that we have some kind of a, either a budget or a policy or a plan that will just be implemented to revive the economy during this period. So this is a part of, obviously, from the other policies that the government does. What is your view? Do you think we should go down that road?
I don't think it does make a significant difference in terms of the actual expenditures, the borrowing needs, and so forth. But where I think it can make a difference, and I have been sort of in favor of some kind of uh, ring fencing and so forth, is that in order to we go back to the issue of rating agencies and so forth, in order to sort of
Right.
negotiate with them and also negotiate, not directly but sort of indirectly with the larger global investment community, if we can show that these, because the problem in India often is the fact that expenditures allocated for one thing has been used for another. So
Right.
capital expenditures have sort of somehow slipped into salary payments. So if we can provide a credible kind of safeguard against that, and I think the COVID budget to an extent achieves that.
Right. Okay. A lot of questions on when the economy you think is expected to recover. What is your? I mean, I know it's difficult to do a crystal ball gazing now, especially when you don't have the data and you don't know what the damage is. But approximately, do you think that FY22 you will see, as some economists and some rating agencies have said, do you think FY22 is when we will see the economy reviving, coming back on a more stronger footing, maybe?
Yeah, I think I would tend to agree with them, and you've sort of referred to the alphabet soup of recovery paths that are being discussed. I would go with something which is slightly different, which is what Mark Zandi of Moody's uh, described the possible recovery as, which is going to be like the Nike swoosh. So you go down and then you sort of
And then you go up.
stand back. Yeah, so I think we'll be on a reasonably elevated portion of the swoosh by fiscal 22. It doesn't mean that we're going to fly away, but we're
Right.
certainly going to be on a visible recovery path by then.
So it's not a W shaped or a U shaped, uh, V shaped.
E-
V shaped, I think many people are saying is out of question.
Yeah, so
Uh,
I would sort of replace the V with the Nike swoosh. So with it's a V with one tail of the V being really stretched out.
right.
W shaped, and I think a lot of it is lot of the shapes are dependent on the path of the infection itself. So what if we have a major return of the virus,
Right.
come autumn or whatever? My bet is that by that time, at least we will not have a vaccine in place. That's for sure. But I think we should have effective therapies in place. The other thing that is missed in most conversations, but with a lot of people, like some people, I would say a lot, people like Rajiv Bajaj have been saying that, look, ultimately the goal has to be herd immunity. It is a much maligned phrase because it was botched up by the UK because it started with the notion of herd immunity. But we
That's
need
right.
to hopefully by that time we'll have some semblance of of a stable, at least the younger part of the population being perhaps infected, but
But
remaining
if you,
in part immune. So I think we'll have to aim for that. I think that needs to come back to the conversation in some way.
Right, right. A lot of people, a lot of industrialists have actually been saying this. I mean,
Yes,
you
I just
mentioned
mentioned Rajiv Bajaj. Yeah.
that's right. But I think Narayan Murthy a couple of days back also said that the lockdown should be lifted quickly, otherwise you will have people dying of hunger,
Yes,
not so
yes.
much from the disease. Your view on that? Do you think the lockdown should? I mean, there is obviously going to be a gradual lifting, where whichever way you look
Right.
at it. It's not going to be a bullet kind of a lifting of the lockdown across the country. You think we should start seeing some kind of a lifting of the lockdown from next week onwards?
Very
That's
definitely
an
so,
option.
and I think I go back to the point that I was making earlier that we have the most stringent lockdown, the smaller stimulus package. We are reasonably sure that we don't have the money to either do large scale benefit transfers to everyone in the population, a check in every Jan Dhan account of a reasonably significant amount. This is not possible in terms of our fiscal constraints, the fact that we are an emerging market. So, what do we do then? Then we need to keep economic activity going as soon as possible. So, I
Right.
think it's yeah,
Absolutely, absolutely. Abhik, one final question
yeah,
before
sure.
we can let you go. This is question is from Sahil Shirgiri from Bangalore. And this is a very important, interesting question about China and India. How much business do you think India can grab, capture from those guys who are actually looking to leave China? And what do you think the government policy should be in this?
I think potentially we can grab a significant part of businesses in different sectors.
Right.
We've kind of sort of messed up on things like textiles and so forth. We haven't done so badly on in terms of telecom handsets. We haven't done badly in terms of electronics and so forth. So there is hope there, and I think it depends really on how quickly we can sort of push through some of the much needed reforms. Is become a cliche, but we need to respond to the needs of industry to make India sort of at least 75% as efficient as China. The rest, the political, the aversion to China, it's sort of its diminishing role in the geopolitical
Yeah.
will do the trick. But we need to be at least 80 75 to 80% as efficient as China.
Right. Okay. Okay. Great. Thank you. Thank you. Thanks a lot, Abhik.
Thanks for your